I'm Michael Fox, and this is the Prospector News Podcast. And joining me, I have longtime contributor, CEO of Soar Financial, the operators of the Oreninc Index, Kai Hoffman, and we're going to talk everything financing today. Welcome aboard, Kai.
Hey, Mike, how's it going? Happy New Year.
Happy New Year to you, too. Good riddance to 2022, I say. How was the financing market last year, given the dismal overview?
Better than expected, to be honest. Looking at the numbers, I was actually quite shocked that the numbers held up better than sentiment would have led us to believe, to be honest. And we were actually raised a decent amount of money despite the negative sentiment. Like you felt like as soon as the Fed started raising interest rates in March, that investors just went away. They just didn't care anymore. And of course, like we're not interested in any risk whatsoever. But we still raised close to $4 billion in the junior space last year. That's a ton of money, and definitely beats the weaker years of 2015, for example, where we barely raised $2 billion. So that's still twice as much, and sentiment felt exactly the same. So there's a bit of a disconnect between maybe like the sentiment and investor interest, which is, I don't know, I need to explore that quite honestly, because it's puzzling. But that being said, I think there's less competition now in the risk universe, let's call it, because crypto has been falling apart. At least it's taken a breather, and there's no competition from the weed sector, cannabis sector as well. So risk not averse, but investors looking for higher risk investments probably came over to the mining side, at least part of it, or part of them.
When you say there was 4.2 billion raised last year, how did that compare to, say, 2021?
It's down, obviously. Like 2021 was close to being a record year. We raised almost 7 billion in 2021. So it is like 60% or 40% less, apologies. But it's definitely way more than we had in 2019 and 2018. 2019 was 2.5, 2018 was 2.8, 2015 was 2.4. But it did feel like 2015. Like I'm sure you share the sentiment, but CEOs were frustrated. Drilling campaigns have been stopped. Companies just had struggles finding investors. But then again, if I look at the total numbers, like, apparently some companies found investors. So maybe we need to be more picky.
That falls in line with what I know of bear markets. Bear markets become stock picker markets because there are generally some diamonds in those roughs, but you have to dig hard to find them. And it's possible that those with really good projects were able to get their financings done, where the others more generally with, less clear roads forward, shall we say, may have been struggling, which is, in line with what you would expect in a bear market. But I like what you said about it being still half as good as the previous record years. So if we want to be cockeyed optimists, we could go and say the glass is half full, right?
No, absolutely. We've still seen a lot of deals happen, but the overall deal size has dropped down as well, right? So lots of like lights on financings just to stay alive. Definitely seeing that. And it's tougher out there, right? And a lot of companies just doing the bare minimum. Besides, staying afloat, they're doing a few geophysical programs, a couple magnetics, IP, and that's pretty much it, right? So barely like any bigger expenditures are happening. It's rare to see companies now announce bigger and larger drill campaigns.
Yeah, well, if the money's not there, there's no money to drill. So Santa Claus didn't show up on the markets. That was kind of made official yesterday. They needed to have a close of 38.23, according to the Great Art Cashin, and that simply didn't happen. So what does that mean for going forward? Although I've been noticing of late, there seems to be, gold's up, silver's up, most of the commodities are up. Are we starting to see a pivot into the mining and commodity space finally?
Well, it's that pair trade with the US dollar, right? So if you look at it, the Dixie, the US dollar index, has been much weaker ever since mid-October. That's been giving some steam or added some fire to the gold and silver price. Gold has been up ever since then, almost $200. We're just ticked to 1860 today, so it's almost $250 since it's low there at 1615. And the US dollar came down from 114 at its peak, almost 115, to now today it's 104. And that has, added fuel to the fire. Fed pivot seems to be likely. If I look at the Fed Watch tool, I think we're down to a 25 basis point hike here in early February. It's a 70% likelihood. And that is a pivot. First 50 basis point hike. Now we're down to 25. That's what the market predicts. And that sends investors back to gold. Buying bullion becomes of interest again. And that's what's adding fuel to the fire. Share prices haven't really moved, although it seems like a lot of stocks have come off their lows mid-December. It wasn't a Santa Claus really by any means, but some of the stocks have definitely bottomed out over the Christmas period and even in December. And we're seeing a bit of a rebound now. Some stocks are moving more strongly than others. But I didn't see any tax loss selling either. So no Santa Claus rally, no tax loss selling. I think that evens it out.
Yeah, I would agree. It's kind of hard to have tax loss selling when there's not a whole lot of gains to be had in the market. The overall market was pretty dismally down across the board. So there was nothing really to offset there this year.
Absolutely. No, it's been tough. And a lot of investors I spoke to, they already started selling in August, September, when it was apparent that there's nothing going on in our market. So that's why there was no tax loss selling. As you said, not a lot of people made money in mining, at least not in junior mining. They probably made it in other commodities, but definitely not in our sector.
Well, here we are in early January. We've got investor conference season just a couple of weeks away. We're heading into financing season. What do you see coming down the pipe for the year? Are we heading into a positive financing period, or are we looking at another? It's going to be a struggle to get money, but good companies will.
We're not out of the woodwork yet, and I think we have some time here, which can be a positive to accumulate, depending on which side of the coin or which side of the spectrum you are. If you're a company CEO, good riddance, good luck. It still will be tough. You'll still have to probably give up the house to raise capital. As an investor, you can still cherry pick, and you might get the odd, really good deal. Quality management teams even might have to give up full warrants, maybe even 5 years, although I haven't seen too many, but definitely more warrant financing happening. The market hasn't turned around just yet. Definitely looking more positive. Gold price is, definitely headed the right direction. 1860. Who are we to complain about that? But sentiment hasn't arrived yet. It's early in the year. I haven't seen any financings really opened yet so far. Of course, a lot of closings at the end of the year. I think investors are still scrambling. I know a lot of companies are looking to raise, need to raise. And in a conversation with Rick Rule the other day, I spoke to him between Christmas and New Year. He said he expects another 6 months of opportunity for the investor to accumulate or to get into placements at a good rate. And I sort of agree with that, unless something drastically changes, or the Fed actually, we should be hearing Fed minutes coming out today as well, signaling what the next step might be. And we'll see what direction the market takes here. But I'm more on the cautious side. I've seen too much. I've been maybe beaten up too much as well, that I'm just not optimistic enough to just jump in both feet first. So I'm cautiously optimistic, but it'll take another 3 to 4 months, in my opinion. Yeah,
it's these things tend to be a long haul and a long slog to get back to normal after they've been down for a while. Yeah, I hear what you're saying. It's like going to Old Yeller over and over again, thinking the dog's going to live at the end. Sorry, spoiler alert for those who didn't see Old Yeller. It's just one of those things. After you get beat down, it's kind of hard to believe that it's gonna turn and change. But the reality, we were talking 1860 gold. When I first started, doing this 20 years ago, gold was $280. If I told them they were going to have $1,000 gold, I would have had CEOs dancing jigs in the aisles at the Vancouver Resource Conference. And now, they're complaining when it's 1860, right? So it's the world changes, and you set the marks, get set differently as we go through. But
no, absolutely. I'm not sure they're complaining about 1860 gold price. They're complaining about just the general lack of interest in this space, right? On the bullion side, it's fairly strong. We're still seeing high premiums for the bullion, for the coins, everything. But the stocks, nobody cares about. And that's, I think, what the problem is here. And that'll turn around eventually when investors figure out that there is money to be made in our sector, and some of the majors are trading still at discounts. But the penny hasn't dropped yet for many.
Yeah. Now, I always wonder this, when we cut back as an industry on our drill programs, does that reinforce the lack of financing, in that there's no results for people to get excited about to put their money forward?
Yeah, it's the typical death spiral, right? You stop work. Why, as an investor, would I be invested? You're not creating any value. You might have to raise $500,000 to $1 million. That is not going to generate any value whatsoever for the shareholder. It's that typical death spiral, right? So you need to figure out, if you're an investor, do you want to stay with the company? It always depends on your entry price as well. If you're underwater, I'd run personally. If you bought cheap maybe a couple of years ago and you got in at a decent price, do you want to wait it out? Maybe. Why would you, though, if there's no news on the horizon for the next 6 to 12 months? So it's a tough value proposition, and those companies are untouchable, in my opinion.
Yeah, it's no news isn't always good news. The market will fill in the blanks sometimes when there isn't news flow, and the market's generally not that glass half full kind of mentality. It's the glass is half empty, and they're more apt to sell and generate negative than they are to think positive.
Oh, absolutely. No, I agree. And I don't know, it's a tough one, right? When do you put out press releases? When does the market care? I hear from companies oh, no, we're not putting anything out. The market won't care. It's well, the market does care. They want to see something, otherwise they'll leave as well. So it's it's a hen and the egg kind of situation. Whatever you do, it's going to be wrong anyways, but you got to do something, right? So make up your mind, but stand by it as well. Just have a strategy in place and be able to communicate that strategy. I think that is key. Investors will be forgiving as long as you have valid reason, right? So I think that's key. And a lot of companies actually don't have a strategy, and that's the problem.
Yeah, I've been a big believer. We as an industry are very poor communicators a lot of the times. And I agree with what you're saying. You have news, you need to put it out. It's kind of like that person that has a resume and hasn't worked for 2 or 3 years trying to find a job. And they go in, and the first question they're always asked is, what have you been doing for the last 2 or 3 years? Well, if you haven't had news releases and signs that you're moving your project forward, that's the same question an investor should be asking you. What have you been doing, since, for the last 6 months, the last year, the last 2 years, right?
Oh, absolutely. And they need to deliver. That's tough. It's not easy. I get that. But you need to put in some kind of effort if you want to attract investor dollars.
Well, some news has got to be better than no news whatsoever, right? So
absolutely.
It's definitely those challenges. Now, the last time we had a situation like this, the financing, we're thinking around 2018, 2019, when we were coming out of the long slog that we had from 2012 on. I found that the financing season at that point started very slow, but it went a lot longer. So instead of it kind of ending, we talk about the post PDAC, kind of ending at the end of March, early April, it actually slogged forward, and there was good, healthy financings going on right up until almost the end of June that year. Do you think that we may be setting ourselves up for a similar scenario?
Tough question. I think we're headed back to normal post-COVID, meaning to regular seasonality. And you brought up 2018. it could be that we're returning to that regular seasonality comes back, because COVID just threw everything under. It just mixed everything up. Like, there was no summer breaks, there were no summer doldrums because nobody worked anyway, or nobody really went on vacation. So there were no summer doldrums for 2 years. And I think we'll see that again. Last year was one of the first years that people could travel again. So we got a taste of it, and we're seeing it in the financing sector again as well. So we ran until the end of December. Now no financings have been announced. I would predict that we'll see a regular financing season. So you mentioned PDAC. We'll see what the gold price does. Of course, that's always the trigger. But in normal times, yes, the financing window, the market is usually strongest until early March, and then it dies off a little bit. We have the Easter break, and then it comes back at the end of May, mid-May until June, because you have to keep in mind that there's usually a 4-month hold period involved as well. So of course nobody wants to finance and then the stock coming off in August. That's kind of lame. There's no volume, no news usually over the summer. And so yeah, I think, short answer, I think we'll be back to our normal seasonality this year.
Well, that's good, because that makes things a lot more predictable. So hopefully we'll see markets rise, and that pivot that we talked about earlier is going to start to entrench itself, and some of these companies will be able to raise some funds to go back out to the bush to work and find some more good things. Coming up very shortly, you're involved with an event that I'm a partner in the New York division of the SME. They've got an event of on-demand presentations beginning January 10th. Tell me about the presentation you're doing for them.
Yeah, no, I'm happy to, and appreciate being invited to the event. High quality, like, thought leaders in mining. How did I get involved? I have no idea. Appreciate the invite though. And but financings, and we're going to look at the market, Christmas presents and death spiral. It's pretty much two sides of the same coin. We talked about companies having to raise money at unfavorable terms, or just raising enough to stay alive. I think that's the death spiral part. If you look at it from an investor standpoint, I highlighted one financing. What the company issued one common share at 3.5 cents and a 5-year 5-cent warrant. If you're lucky and if you hit the right one, that could be a huge opportunity, right? That could be a Christmas present for you, and that's what I'll be talking about, highlighting the market, looking at how the financings have been going, also highlighting some new rules and old shenanigans in our sector, including some new tax credits.
Perfect. So for those of you that are interested in that, these are videos that are going to be available on demand, courtesy of the New York division of the SME. I will put a link at the end of the description of this podcast that'll allow you to register, and you'll be able to download those videos and watch them on demand at your leisure going forward. Kai is not the only thought leader there. Tim Elf, who puts the event on, curates a wonderful lineup of people with different backgrounds and interests to talk about a wide range and broad strokes of issues that face our industry, from engineering all the way up to finance. So well worth it, and those videos will be available starting on January the 10th. Kai, as always, thank you for joining me, and I look forward to seeing good news coming through the year.
Absolutely. Mike, thank you so much for having me on. I appreciate it.
The Prospector News podcast is for educational purposes only. The opinions expressed are those of the participants and are not to be taken as investment advice. Listeners need to do their own due diligence and seek advice of a licensed investment advisor.